I'm Karthik Malhotra. The big story that we would be tracking all day today comes from India's macroeconomic data. The chief economic advisor is all set to release India's economic survey today at 11 a.m. Can India gun for 8% growth? That's the big question that we would keep our eyes on. Also on the show, we've seen some recovery in the Indian stock markets after days and days of FII selling. So the big question really is, will the market momentum continue, especially in anticipation of Budget 2026? And of course, in our global stories, the US Fed keeps interest rates steady. Jerome Powell defies pressure from US President Donald Trump, listens instead to economic data. All this and more on this edition of Morning Brief at 9. This is Morning Brief at 9. First up, let's look at all the headlines we're tracking for you this Thursday morning. India and the European Union agree on carbon tariff roadmap, green funding and mobility as free trade pact moves closer to ratification. Meanwhile, India rules out Turkey using India-EU free trade pact for market access, says FTA benefits limited to member nations only. India close to sealing free trade pact with Chile, eyes critical minerals as ASEAN review and Mercosur talk move forward. India and Canada move to revive free trade talks as Ottawa seeks to fast-track negotiations and reset trade ties. Global energy CEOs back India's growth story as Prime Minister Modi pitches for a $100 billion investment opportunity at India Energy Week 2026. The Aircraft Accident Investigation Bureau launches in-depth probe into Baramati Learjet crash as Civil Aviation Minister rules out safety concerns with aircraft operator. 3 days of disruption cannot define 20 years of IndiGo, says CEO Pieter Elbers as airline faces DGCA action. The Enforcement Directorate attaches fresh 1,800 crore rupees assets in money laundering probe against Anil Ambani Group. Total seizures near 12,000 crore rupees. And no ebbing in gold prices. Gold jumps to a record 1,71,000 rupees per 10 grams. And silver hits an all-time high of 3,85,000 rupees per kg as weak dollar drives global rally. India and the European Union have reached a broad understanding on how to address the EU's carbon tariff regime, easing out one of the most contentious issues in their newly concluded free trade agreement. From Jan 1st this year, the EU began implementing the world's first carbon tariff under the Carbon Border Adjustment Mechanism, or CBAM, which imposes a levy on carbon-intensive imports such as steel, cement and aluminum. Now, to address its impact on Indian industries, both sides are now working towards a memorandum of understanding that will see the EU support India's decarbonization efforts through technology, technical assistance and funding. Official sources say the EU has committed around $500 million for the first 2 years to help Indian industries reduce their carbon footprint. A technical working group will also be set up to ensure transparency in how emissions are measured and how tariffs are calculated. Now, India has secured EU agreement to accredit Indian verifiers to audit carbon footprint, addressing cost and access concerns. New Delhi has also ensured that any flexibility granted by the EU to other countries under CBAM will automatically apply to India, while domestic carbon levies will be accounted for to avoid double taxation. Both sides have committed to fast-tracking the signing and ratification of the free trade agreement, which will cover nearly a quarter of global GDP. The deal will eliminate tariffs on 99% of Indian exports to the EU, benefiting sectors such as textile, apparel, leather, footwear and marine products, while European exporters stand to gain up to 4 billion euros annually, particularly in wine, automobiles, chemicals and pharmaceuticals. Meanwhile, Commerce and Industry Minister Piyush Goyal hit back at the Congress on Wednesday over its criticism of the India-EU Free Trade Agreement, calling the pact a win-win deal and not a zero-sum game. Responding to concerns flagged by Congress leader Jairam Ramesh on issues such as carbon tariffs, market access, as well as regulatory barriers, Goyal said decades of indecision had cost India jobs, income and growth. He argued that the agreement brings together complementary economies with combined GDP of $25 trillion and a market of 2 billion people. And India has made it clear that Turkiye cannot route its exports to New Delhi by taking advantage of the India-EU Free Trade Agreement. An official said on Wednesday that Turkish goods will not qualify for preferential access under the India-EU FTA, even after the pact is signed and implemented later this year. The clarification comes amid strained ties between India and Turkey, following Ankara's support for Pakistan and its criticism of India's strikes on terror camps in Pakistan under Operation Sindoor in May last year. Now, while India and the EU concluded negotiations for the landmark trade agreement this week, officials stressed that its benefits are strictly limited to participating members and cannot be extended indirectly to third countries. Trade data shows that India's exports to Turkey fell 14% to $5.71 billion in 2024-25, while imports declined over 20% to around $3 billion. Turkey accounts for just about 1.3% of India's total exports. And staying with trade deals, India is close to wrapping up negotiations for a free trade agreement with Chile that could boost access to critical minerals needed for key sectors such as electronics, automobiles and solar energy. According to an official, talks with the South American nation are in the final stages and are expected to pick up pace after the union budget. The agreement is likely to expand the existing preferential trade pact signed in 2006 into a comprehensive economic partnership covering areas such as digital services, investment cooperation, MSMEs, as well as critical minerals. While bilateral trade remains modest, India's exports to Chile slipped marginally to $1.15 billion in 2024-25, even as imports surged 72% to $2.6 billion. The official also said India's review of the goods trade agreement with the 10-nation ASEAN bloc is progressing and taking shape. In addition, New Delhi has begun preliminary scoping studies for a trade pact with the Mercosur bloc, which includes Brazil, Argentina, Uruguay and Paraguay, signing a broader push to deepen trade ties with Latin America. And a lot more news around free trade pacts, this time about Canada. And Canada has also expressed interest in fast-tracking the launch of negotiations for a free trade agreement with India, indicating a reset in bilateral trade ties. An official said that Canada's Minister of Export Promotion, International Trade and Economic Development, Maninder Sidhu, has invited Commerce and Industry Minister Piyush Goyal to visit Canada in the third week of next month. The two sides were earlier negotiating a trade pact, but talks were paused by Canada in 2023. Officials say both countries have now agreed to start afresh, citing major shifts in the global trade framework over the past 2 years. Commerce Secretary Rajesh Agarwal has confirmed that India and Canada are finalizing the terms of reference to formally begin FTA negotiations, which will define the scope and framework of the proposed pact. Now, both sides have also appointed their chief negotiators. Trade data shows India's exports to Canada rose nearly 10% to $4.22 billion in 2024-25, while imports dipped slightly to $4.44 billion. Moving on now, Prime Minister Narendra Modi on Wednesday interacted with chief executives of leading global and Indian energy companies during the India Energy Week 2026, with industry leaders expressing strong confidence in India's growth outlook and outlining plans to expand their presence in the country. At a high-level roundtable held at the Prime Minister's residence, CEOs cited policy stability, reform momentum and long-term demand visibility as key reasons driving investment interest in India's energy sector. The Prime Minister said such interactions have emerged as an important platform for industry-government alignment, helping refine policy frameworks and address sector-specific challenges. Prime Minister Modi said the country is rapidly moving towards becoming the world's third largest economy and will play a decisive role in shaping global energy demand and supply. He flagged major investment opportunities, including around $100 billion in exploration and production and a $30 billion opportunity in the compressed biogas segment. And staying with more stories around what the Prime Minister of India said, highlighting India's growth potential and the policy stability, Prime Minister Narendra Modi pitched major investment opportunities in aircraft manufacturing, pilot training, advanced air mobility and aircraft leasing. In a special message at the Wings India 2026 Aviation Summit, Prime Minister Modi said India is among the world's fastest growing civil aviation markets with rising air traffic demand and airline orders for over 1,500 aircraft. He said the government is pushing regulatory reforms to make cargo movement faster and more efficient, backed by modern warehousing and logistics infrastructure. Prime Minister Modi said India offers a rare combination of scale, political stability and technological ambition, urging investors to seize what he called a golden opportunity and become long-term partners in India's aviation journey.
एक बड़ा ग्लोबल एविएशन हब बन रहा है, तब ये भी जरूरी है कि हम एविएशन से जुड़ी जरूरतों के लिए दूसरों पर निर्भर ना रहें। हमें आत्मनिर्भर का रास्ता मजबूत करना ही होगा। ये भारत में इन्वेस्ट करने आ रही कंपनियों के लिए भी मददगार होगा। इसी सोच के साथ भारत एयरक्राफ्ट डिजाइन, एयरक्राफ्ट मैन्युफैक्चरिंग और एयरक्राफ्ट एमआरओ इकोसिस्टम पर बहुत जोर दे रहा है। आज भी भारत एयरक्राफ्ट पार्ट्स का एक बड़ा मैन्युफैक्चरर और सप्लायर है। हम मिलिट्री और ट्रांसपोर्ट एयरक्राफ्ट देश में बनाना शुरू कर रहे हैं। भारत सिविल एयरक्राफ्ट मैन्युफैक्चरिंग की दिशा में भी आगे बढ़ रहा है और आप सभी इन्वेस्टर्स जानते हैं भारत के पास कई एडवांटेज भी हैं। ग्लोबल एयर कॉरिडोर्स में भारत की जियोग्राफिक पोजीशन, हमारा अनमैच्ड डोमेस्टिक फीडर नेटवर्क और भविष्य में होने वाला लॉन्ग हॉल फ्लीट्स का विस्तार, ये हमारी बहुत बड़ी शक्ति है।
And following the tragic air crash in Baramati, Civil Aviation Minister K. Rammohan Naidu said the Aircraft Accident Investigation Bureau will conduct an in-depth probe into the plane crash at Baramati Airport, adding that there are no safety concerns related to the aircraft's operator. Remember, the Learjet 45 aircraft operated by Delhi-based non-scheduled operator VSR Ventures crashed on Wednesday morning, killing Maharashtra's Deputy Chief Minister Ajit Pawar. Naidu said teams from the AAIB and the Directorate General of Civil Aviation are at the site and examining all aspects of the incident. Now, speaking on the sidelines of the Wings India 2026 Aviation Summit, after visiting the crash site, the minister said the DGCA had carried out all required checks and approvals and the operator had undergone assessment last year. He added that the pilot in command was highly experienced with over 15,000 flying hours. Now, calling it a very unfortunate incident, Naidu said the government would rely only on verified findings from the AAIB and not on speculation or rumors. Listen in.
So what I got to know from the preliminary information that I received from the team in the morning itself is that the first time the pilot wanted to land at Baramati, there was a visibility problem, in the sense he was not able to sight the runway. So once that happened, he has communicated to the ATC, and the ATC also suggested to go around. So he has hovered around the runway, and then when he came back to land again, that was when the discussion happened again between the ATC, which is at the Baramati airport. And there again at the communication level, when they asked about the sighting of the runway, the pilot seems to have sighted the runway, and the clearance was given for landing, and that was when this incident also happened. So we just need to in-depth look at that time at what has happened. So this is going to be the part where the AIB has to offer their help.
Staying with stories around aviation, as IndiGo faces DGCA action, CEO Pieter Elbers said that 3 days of operational disruptions cannot define the airline's 20-year journey, while admitting that passengers were let down and the episode hurt the carrier's reputation. Now, speaking at his first in-person media interaction in India after last month's disruptions, Elbers acknowledged the inconvenience caused to customers between December 3rd and 5th, when over 2,500 flights were cancelled and nearly 1,900 were delayed, impacting more than 3 lakh passengers nationwide. Following the disruptions, aviation regulator DGCA curtailed IndiGo's winter schedule by 10% and imposed fines of over 22 crore rupees. Pieter Elbers said the airline has taken the episode seriously and will use it as a learning to emerge stronger. The DGCA has also directed IndiGo to furnish a 50 crore rupee bank guarantee to ensure long-term systemic corrections.
Days they had to face, and again, cannot apologize enough for that. On those 3 days, we've let them down. When on the 5th we were starting to reset our network, we took a deep cut for the days thereafter, and we started to rebuild. And by the 9th, we were back to a stable operation. So could all customers travel between 5 and 9 according to their original scheme? No. But did we inform them on time? I'm sure you'll find 1 or 2 who weren't. But we tried everyone to inform on time, offer an alternative, and get them rebooked to another flight. And by the fact that at the end of December we were back to 3.7, 3.8 lakh customers on a daily basis, that we have done the refunds in a very smooth and efficient way, that we have done the car compensation, and that we have done the gesture of care for those days. Does it make up for the inconvenience the customers have? No, it doesn't. And we know there's a big responsibility on our shoulder to start rebuilding that. And we take that responsibility, and my 68,000 colleagues at IndiGo are fully committed to make that responsibility. But at the same time, we cannot let 3 days, and if you want to make it 7 days, define what IndiGo has built over 20 years.
And moving on now, the Enforcement Directorate has attached fresh assets worth over 1,800 crore rupees in its ongoing money laundering probe against companies linked to Reliance Group Chairman Anil Ambani. Now, with the latest action, the total value of assets attached in the company and in this case has now risen to nearly 12,000 crore rupees. The Enforcement Directorate said it issued 4 provisional attachment orders under the Prevention of Money Laundering Act, covering bank deposits, unquoted shareholdings and immovable properties. The attachments relate to cases involving Reliance Home Finance, Reliance Commercial Finance and alleged Yes Bank fraud, and Reliance Communications. Freshly attached assets include Reliance Infrastructure's shareholding in BSES Yamuna Power, BSES Rajdhani Power and Mumbai Metro 1, along with bank deposits and receivables worth nearly 300 crore rupees. The agency also attached a residential property linked to a senior executive and financial assets of a family member of another employee. The ED has alleged large-scale diversion and routing of public funds through group companies, including via Yes Bank exposures, and said investigations are continuing based on CBI FIR. And we will slip into a very short commercial break. When we come back, Amit Kumar Gupta will join us and we'll try and understand the green shoots that we are seeing in the stock markets over the last 2 days. Are they likely to continue, especially as expectations ride high on Budget 2026? All this and more on the other side of the break. You're watching Morning Brief at 9.
रिश्तों को रंग दो दुनिया को रंग दो
Birla Opus Paints.
पढ़ता है खेलता है झूलता उछलता है दौड़ता कभी कभी दौड़ कराता है आगे आगे बढ़ता है इंडिया अमूल दूध पीता है इंडिया
Taxes, jobs, housing, electric vehicles, defense. News 9 decodes the numbers behind the noise. You define India's growth story. We decode what's in it for you. Budget 2026. No noise, no confusion. A budget for a bulletproof Bharat.
तेरी एक जिद और फैक्ट्री वर्कर्स सब डबल।
रिटायर हो जाऊं क्या? अच्छा, बिजनेस के लिए लोन का आइडिया किसका था? पर बुढ़ापा आ गया हो।
इनकी जिद ने कारोबार भी बढ़ाया और रोजगार भी। टाटा कैपिटल बिजनेस लोन्स के साथ।
Welcome back. You're watching News 9. This is Morning Brief at 9. Time now for us to take stock of what's happening in the stock market. And it seems the 2 days of green shoots that we saw in the Indian stock markets are now pivoting back into red territory. And news not looking very encouraging as both Sensex and Nifty have slipped from yesterday's highs. In fact, if you remember, yesterday we saw Nifty 50 comfortably above the 25,300 mark. But this morning we are seeing that the Nifty 50 has slipped about a third of a percentage point or so back to the 25,258 odd levels. Meanwhile, the Sensex is also now squarely below the 82,100 range. And even though there were positive indicators, especially on Gift Nifty, if you take that as a cue, there was an expectation that markets are going to open steady, albeit a little bit in the green territory. But that does not seem to be the case, especially as far as investors this morning are concerned. Meanwhile, some positive action coming in from the Nifty Small Cap 100. That index is up about half a percentage point or so. Remember, this could be one of those sectors where you have a lot of apparel and a lot of textile leather manufacturers whose market opportunities in Europe open up with respect to the India-EU free trade agreement. So some bullish momentum, positive action, at least if we can't really call it a bullish momentum as yet, coming in from the small cap 100 space this morning. Meanwhile, India's volatility index, India VIX, is up about 2% or so, now touching almost 14 levels or so. So that's the overview of how markets have opened and performed in the first 5 minutes or so of trading. Let's pull up the Nifty 50 heat map and try and see which are the sectors and which are the companies which are performing not at par and overall pulling down the Nifty 50 index. And pain seems to be coming from the IT space as well as from the consumer durable space. We'll tell you about these two cases as we await Amit Kumar Gupta, who will join us shortly. But as things stand right now, last night, US Fed kept interest rates unchanged. US Fed Chair Reserve Jerome Powell did not give Donald Trump that 25 basis point rate cut which was expected, and that seems to be weighing down on Indian IT stocks which rely on discretionary spending from US companies. Meanwhile, the auto space also a little somber despite a 4% growth in profitability that Maruti Suzuki reported yesterday. That stock saw a lot of movement yesterday. At one point it was down about 4%. It recovered about 6% or so from its daily low level, and this morning again that stock is taking a bit of beating. In fact, Maruti Suzuki down about 2.7%, the biggest loser as far as the auto stocks on Nifty 50 are concerned. The banking space is holding steady. Marginal dip in HDFC Bank, ICICI Bank down about 0.9% or so. Reliance Industries absolutely flat. Other energy stocks including Coal India and ONGC showing some green shoots this morning. Amit Kumar Gupta from Fintrec Capital joins us this morning. Amit, good morning. Thank you so much. Pleasure having you back with us on News 9 after a while. Just help us understand what exactly is the mood on the market right now, and there are many factors that could potentially be weighing in on market sentiment. first up, of course, is the mixed bag of Q3 results, especially among the Nifty 50 companies which have declared results so far. No real direction visible and no trend line which could really be established to help investors understand where the market mood is going from here, especially as far as Q3 earnings are concerned.
Yeah, hi Karthik, good morning. Thank you for having me. Yes, I think the markets are a little bit in a flux, especially the equity markets. Obviously, there are a lot of events which are happening. There was a FOMC meeting which did not had the rate cut as expected. There is a budget coming up. The Q3 earnings are also there. The earnings have been a mixed bag. Certain sectors have shown earning growth much better than what it was quarter on quarter or year on year. But the growth potential for the next 6 to 12 months still remains mixed. So my sense is that earnings growth will be very stock specific and sector specific. And once the budget is out of the way, once the market has digested the budget, then we'll see probably one direction being picked. Till then, I think it's very stock specific.
All right. So stock specific, potentially sector specific, but I want to spend a minute with you, Amit, discussing the India-EU free trade agreement. And what we are seeing, in fact, even on the charts this morning, is that the small cap index continues to outperform the mid cap as well as the larger stock indices, the Sensex and the Nifty. Is it a fair assumption to assume that the MSMEs, especially those in textile trade, leather, apparel, accessories, gems, jewelry, are these likely to be some capitalizations to bet on, if not specific sectors to bet on, especially with all the action that we are seeing on free trade agreements?
Right. I think, India will obviously eliminate duties on almost 93% of the EU imports in this. EU will do it for 99% of the Indian exports. So that's a big boost for labor-intensive and export-oriented industries in India. Some of the beneficiary sectors could be like textile, apparel, leather goods, footwear, gems and jewelry, and all these sectors have been, badly impacted by what was happening with the US tariffs. So these EU deal matters a lot in that context.
Right.
Now, eliminating these tariffs would mean that India can potentially swing orders from countries like Bangladesh and Vietnam in India's favor, especially for firms that already operate at that scale. Most of them are quite a few of them are listed as well, and they can actually meet European quality standards.
Right.
Similarly, I think electronics manufacturing and engineering goods can also gain over time because there also 10% tariffs have been eliminated. European firms in any case are actively diversifying supply chains to reduce exposure to China for political and regulatory certainty.
Right.
So my sense is there is a lot of positives in that, but the market obviously may be getting excited in the short term because all these needs to be legally ratified, passed in the EU Parliament, and then it will come on board only sometime in early next year.
Right.
Calendar year 27.
Right.
So there could be some changes by then.
Right.
But if there is a possibility of going there, then companies will start preparing accordingly, at least 6 months ahead.
Right. So a deferred positive, if we can call it that, but a positive nonetheless for labor-intensive sectors as far as not just the India-EU FTA, but the FTAs and the agreements that India is signing with countries across the world in that sense. But I want to move back to something you mentioned some time back, and that's about the US Fed keeping interest rates unchanged for the Jan FOMC. Now, again, this is an interest rate, and this is a metric which is absolutely critical for India's IT sector, and India's IT sector has not had a great 2025, and it seems that this pain in IT stocks and investors will have to deal with this pain for what, at least another quarter or so, because it's unlikely that even the budget announcements are going to change anything dramatically for the IT sector. And we've seen that the textbook definition of mixed bag of results is something that the IT sector has shown us in Q3. So overall pain in the IT space likely to continue in your experience?
So I think 2025 was, one of the worst years for IT, and there were obviously uncertainty. But I think valuations are still in favor in a lot of these IT stocks. But one needs to differentiate between what kind of growth trajectory these have. IT services companies, the likes of Infosys, Wipro, TCS, etc., they might show 3 to 5% kind of a growth only. Whereas the higher growth could be in the companies which are adapting to AI faster. So my hunting ground would be probably in the mid cap and the small cap space, which can grow by 12 to 15% year on year. Having said that, I don't think budget will be a much bigger issue with the IT companies. It's more to do with what is happening in the US, and in the US we are seeing that interest rates are on a trajectory already. Fed has cut. There could be some more easing into 2026, and AI budgets would also get freezed. So you'll see a lot of companies, especially in the BFSI sector in US, giving out more projects to the Indian companies. So my sense is that 26 calendar year will be better than 25, and valuations are in favor. So I'm not too negative on the IT sector as a whole.
Okay.
But my hunting ground is more towards the small and mid caps.
All right. So small and mid cap IT stocks, and potentially 2026 likely to be better than 2025. I want to move back to budget expectations beyond the IT sector, beyond artificial intelligence. And there is expectation that the government is going to increase its capex allocation to about 12 lakh crore rupees or so. Which are the sectors which are likely to benefit in your estimation and expectation from budget? Do you think this is a good time to potentially accumulate some defense stocks? Is it time to accumulate some infrastructure stocks? What should investors do in anticipation to budget 2026?
So I think I have a slightly different opinion on that. I think budget is unlikely to be dramatic.
Okay.
Instead, it will probably reflect a careful balancing act between supporting growth wherever possible and preserving fiscal credibility and avoiding long-term slippages. So that means the focus should be less on budget day announcements and more on medium-term themes, where companies can grow even in a slower macro environment. I think in general, government hands are tied, so they're likely to stick to the fiscal deficit target. So they had a 11 lakh crore capex last time. I think there is still question mark whether that can be achieved for this current financial year, FY26. I don't expect a higher allocation to that. Probably it will be around that number only, 10 to 12 lakh crores for next financial year. So yeah, capex will happen, whether it is defense or whether it is infrastructure. But it is not something which I like to go and buy today. I would like to see some orders actually being allocated in the next couple of months, and then take a call whether I want to increase exposure to these themes. So it's a wait and watch for me as far as the capex is concerned.
All right, and just let's spend about a minute or so also talking about expectations from the economic survey, which is going to be released today. Now, in your anticipation, do you feel that we can look at an 8% growth rate for this financial year, given that we've had fabulous numbers coming in both in Q1 and Q2, 7.8% and 8.2% aggregate for the first half at 8%, and Q3 with the GST 2.0 reforms likely, and not just the GST reforms, in fact all high frequency indicators suggesting that Q3 likely to even outperform Q2. So overall, can we expect north of 8% as far as the full year is concerned?
I think Q3 outperforming Q2 was pretty much expected, because you had this 5 weeks of slump down in consumption in Q2 because of the GST changes. So a lot of the demand actually got pushed from Q2 to Q3. So quarter on quarter, Q3 was always expected to be much better. On paper, FY26 real GDP growth still looks respectable. But if you actually dig deep into the headlines, the story becomes a little less comforting. Consumption after the GST cut boom, that has again slowed down in a lot of sectors. The private investment still remains very cautious, and the household savings are declining. There have been multiple studies which says that the income growth for both households and corporations have actually weakened over year on year, even if selective tax cuts have supported pockets of spending. So I will be very keenly watching out how the corporate earnings can be sustained, what is the survey actually showing, and how the government is looking to boost consumption even in the next fiscal year. A major part of that will be coming from the pay commission, 8th pay commission, which is likely to come early next year.
All right, and before I let you go, Amit, I also want to get a quick view from you on commodities, precious metals, gold and silver, and crazy rally we've seen all of 2025 and an even steeper one at the start of 2026. In fact, gold at 1,71,000 rupees per 10 grams, silver at 3,85,000 rupees per kg. And those who have not invested in these metals are now literally living the FOMO life. Have they missed out on the rally, and is it too late for those who have not participated to now enter at these levels?
So I think there was a time to buy it. If you remember last year, we had a conversation. I was very bullish on silver.
Yeah.
I even said that silver is going to outperform the gold, even though, the trajectory for both of them are up. My sense is, after such a sharp rise, there is a lot of speculation which is happening. The margins are actually constantly going up by the exchanges. So the risk of a major correction in February can't be ruled out after such a sharp rise.
Okay.
But central bank purchases are usually long-term and rarely reversed quickly. So investor can still hedge against a potential sort of a bubble in AI. But my sense is that, things have gone a little bit too much towards the speculation side rather than towards the investing side.
Okay.
Obviously, in silver, there is a physical silver shortage. There is a curb by China on the exports. So there are a lot of issues in the physical market. So I'm avoiding fresh exposure at this point of time. If somebody has any exposure, they can sort of keep a stop loss on their positions.
Okay.
These are like raging rivers. You have the option to jump in and flow in with the current or sit out. You cannot expect to ride a rocky boat and be in control of all this. One who chose to flow with the current, most of the people will make losses. Only a few skilled traders will actually come out winners. So I don't think there is any investment thesis remaining now. It's more like speculation as of now.
All right, we will leave it at that. Amit Kumar Gupta, pleasure having you back with us on News 9. Thank you so much for your time. And with that, we will slip into another short break. A lot more coming up on the other side. Keep watching News 9. This is Morning Brief at 9.
रश्मि, हाँ? ये मैडम बड़े शहर से छोटे शहर बसने जा रही है, बताओ। अंकल
इंडिया के छोटे छोटे शहरों में ही तो है बड़े बड़े अखाड़े।
नए नए दावपेच सीखेगी और फ्यूचर में मेडल जीतेगी। और बेटा, इनका फ्यूचर?
बड़े पापा, SBI लाइफ से इनका फ्यूचर सिक्योर है।
तभी तो इसकी जीत का इरादा पक्का है। करो पूरे अपने इरादे,
अपनों से किए सभी वादे।
SBI लाइफ अपने लिए,
अपनों के लिए।
पढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया।
टाटा कैपिटल 2 व्हीलर लोन्स के साथ इसने की अपनी नई बाइक की जिद पूरी।
It's the final countdown, just 3 days to go for Union Budget 2026, with the Union Budget for FY 2026-27 set to be presented by Finance Minister Nirmala Sitharaman on Sunday, February 1st. All eyes are on the big policy decisions ahead. Now, News 9 has launched a special Budget 2026 poll, and your voice matters most. But we will come to that poll in just a bit. First up, India's production-linked incentive scheme, which has helped factories scale up. Now the spotlight is on whether it can deliver jobs at scale. Now, with Union Budget just days away, the government's flagship manufacturing push is facing a crucial rethink. As fiscal space tightens and industry demands grow louder, the budget could either reshape PLI into a sharper jobs and exports-driven tool or leave it largely output-focused. Take a look.
As India heads into the Union Budget 2026, attention is turning to the Production-Linked Incentive Scheme, one of the government's most ambitious industrial policy bets. Launched to boost domestic manufacturing and reduce import dependence, PLI now faces a critical question. Does it need a redesign to deliver more jobs, exports, and technology gains? Since its launch in 2020, PLI schemes have been rolled out across 14 key sectors with a total approved outlay of 1.97 lakh crore rupees, attracting nearly 2 lakh crore rupees in investments and generating over 18 lakh crore rupees in incremental production, particularly in electronics, mobile manufacturing, pharmaceuticals, and auto components. Exports are a major PLI win, exceeding 7.5 lakh crore rupees. But nearly 5 years in, concerns are becoming more visible. While the most recent data from the Ministry of Commerce and Industry as of September 2025 reports over 12.5 lakh jobs generated across the 14 PLI sectors, employment growth has still lagged expectations, particularly in capital-intensive sectors. Economists say PLI has helped scale manufacturing, but has been less effective in spreading gains across MSMEs, regions, and labor-intensive industries. Industry feedback suggests a one-size-fits-all incentive design is no longer working. Industry feedback highlights sector-specific challenges, from margin pressure and duty uncertainty in solar and renewable energy to high technology transition costs in electric vehicles and batteries. Textiles and apparel, despite their strong job creation potential, are seen as receiving relatively lower incentives, while chemicals and specialty materials remain capital-intensive with long gestation periods. Ahead of Budget 2026, industry bodies are calling for sector-specific incentive structures under a PLI 2.0 framework with stronger links to employment generation, longer incentive windows for high-technology manufacturing, and clearer exit rules with predictable payouts. These demands come against a tight fiscal backdrop, with the government targeting a fiscal deficit of around 4.3 to 4.4% of GDP and signaling a shift towards quality capital expenditure rather than expanding subsidy-based support. As the Finance Minister presents her record 9th consecutive budget on the 1st of February, 3 signals will be closely tracked. Markets will watch for signs of a redesign of PLI for labor-intensive sectors, the introduction of export and technology-linked incentives, and closer integration of PLI with customs duties, free trade agreements, and logistics policy. PLI has reshaped India's manufacturing narrative, but Budget 2026 will decide whether it evolves from an output-led scheme into a jobs and exports-driven strategy. The question is no longer whether PLI works, but whether it actually works well enough for India's next phase of industrial growth.
All right, so what will and what won't Finance Minister Nirmala Sitharaman present in her budget on the 1st of February? Well, you can try and don the Finance Minister's hat for a day and participate in the News 9 poll. The question that we are asking you today, remember, it's not for nothing. If you answer all the questions, the 10 questions that we are asking every single day correctly, you stand to win Amazon vouchers. That's right. So pull out your phones, open your camera application, scan the QR code and participate in the budget poll with a yes or a no. The question we are asking today is, will Budget 2026 reduce the key taxes, the long-term capital gains tax, the short-term capital gains tax, or the security transaction tax. All you have to do is pull out your mobile phone, scan the QR code, answer with a yes or a no, and stand to win Amazon vouchers if you answer all 10 questions correctly. That's the question of the day. Will Budget 2026 reduce long-term capital gains tax, short-term capital gains tax, and security transaction tax? Go ahead, vote now, and stand a chance to win. And with that, time for another very short break. A lot more coming up. Global stories we're tracking for you this Thursday morning. On the other side of the break, you are watching News 9.
रश्मि, हाँ? ये मैडम बड़े शहर से छोटे शहर बसने जा रही है, बताओ।
अंकल इंडिया के छोटे छोटे शहरों में ही तो है बड़े बड़े अखाड़े।
नए नए दावपेच सीखेगी और फ्यूचर में मेडल जीतेगी। और बेटा, इनका फ्यूचर?
बड़े पापा, SBI लाइफ से इनका फ्यूचर सिक्योर है।
तभी तो इसकी जीत का इरादा पक्का है। करो पूरे अपने इरादे,
अपनों से किए सभी वादे।
SBI लाइफ अपने लिए,
अपनों के लिए।
पढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया।
Taxes, jobs, housing, electric vehicles, defense. News 9 decodes the numbers behind the noise. You define India's growth story. We decode what's in it for you. Budget 2026. No noise, no confusion. A budget for a bulletproof Bharat.
इनकी जिद ने किया डेस्टिनेशन वेडिंग का सपना सच, टाटा कैपिटल पर्सनल लोन्स के साथ।
Welcome back. You are watching Morning Brief at 9. Time now to look at some global stories we are following for you this morning. Let's begin with the US. Bank of America and JP Morgan Chase are backing a new Trump initiative. Both lenders said they will match the US government's $1,000 contribution to the newly launched Trump accounts, offering the new bonds of eligible employees an early entry into the stock market. The accounts were created as part of Trump's One Big Beautiful Act and expected to be rolled out on the 4th of July. Take a look.
America's biggest banks are backing President Donald Trump's starter investment accounts for newborns. Bank of America and JP Morgan Chase will both match the U.S. government's initial $1,000 contribution to the newly created Trump accounts, giving eligible employees newborns a head start in the stock market. Trump touted the starter accounts during a speech on Wednesday.
For the first time ever, we're going to give every newborn American child a financial stake in the future, head start at life, and a fair shot at the American dream.
The Trump accounts will consist of $1,000 in seed money from the U.S. Treasury, deposited into investment accounts for all children born between 2025 and 2028 with a valid Social Security number. Wednesday's speeches also featured Treasury Secretary Scott Bessent and supporters including singer Nicki Minaj.
I am probably the president's #1 fan.
The accounts were created as part of Trump's One Big Beautiful Bill Act and are expected to be rolled out on July 4th. The government has said it will invest the money in low-cost index funds that grow tax-deferred. Income taxes are due upon withdrawal. Bessent said more than 500,000 families have signed up for the investment accounts in recent days. He told Fox News the accounts would give more people access to potential stock market earnings and compound interest. Relatives can also add to the initial federal seed money in the accounts, which children can use when they turn 18 to pay for cars, a home, college, or to fund a retirement account. Private investors are also donating to the accounts, including Michael and Susan Dell, who contributed $6.25 billion.
Well, the U.S. Federal Reserve held interest rates steady on Wednesday at its first policy gathering in 2026, citing robust economic growth as the central bank resists President Donald Trump's mounting pressure for rate cuts. On Wednesday, the Fed voted 10-2 to maintain rates at a range between 3.50 and 3.75%, an outcome that was widely expected as officials await more data on the world's biggest economy. Let's listen in to U.S. Fed Chair Jerome Powell.
While job gains have remained low, the unemployment rate has shown some signs of stabilization, and inflation remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy rate unchanged. If people lose their faith that we're making decisions, only on the basis of our assessment of what's best for everyone, for the wide public, rather than trying to benefit one group or another, if you lose that, it's going to be hard to retain it. And we haven't lost it. I don't believe we will.
And U.S. Fed Reserve Chair Jerome Powell on Wednesday also called the Supreme Court case over President Donald Trump's attempt to remove Fed Governor Lisa Cook as the most important legal challenge in the central bank's history. The case is being closely watched on Wall Street and in Washington as its outcome could redefine the balance of power between the White House and the U.S. Fed at a time when monetary policy is already under intense political pressure.
I wanted to ask that, you attended the Supreme Court hearing last week on the Lisa Cook case, and Treasury Secretary Scott Bessent criticized that as political. Can you say why you attended and what you would say in response to the Secretary's criticism?
So let me start with, I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that case is perhaps the most important legal case in the Fed's 113-year history. And as I thought about it, I thought it might be hard to explain why I didn't attend. In addition, Paul Volcker went to a Supreme Court case famously in, I guess, 1985 or so. So it's precedented, and I thought it was an appropriate thing, and I did it.
And Wall Street wrapped up a muted session on Wednesday as investors digested the Federal Reserve's decision to keep interest rates unchanged, offering little clarity on when borrowing costs might actually come down. The Dow and S&P 500 hovered near flat, while the Nasdaq edged higher, reflecting cautious positioning ahead of key earnings and economic data. Take a look.
U.S. stocks finished little changed Wednesday, with the Dow and S&P 500 basically flat and the Nasdaq up fractionally. The Federal Reserve kept interest rates unchanged as expected and gave little indication when borrowing costs might fall again. Dean Smith, chief strategist and portfolio manager with Folio Beyond, says he believes the Fed thinks they achieved the soft landing they were aiming for.
In the statement that was released, they said inflation is a little higher than we would like, but it's not accelerating. They're attributing that largely to tariffs. They also said that the labor market has stabilized at what appears to be, most people would agree, around full employment, 4.3, 4.5% in there. So they're claiming victory. They're going to be on hold for a while, and that's going to be the case regardless of who the next Fed chairman is.
Investors were also focused on the flood of earnings reports coming in. After the closing bell, 3 of the Magnificent 7 tech firms released results. Shares of Meta rose 10% in extended trading after forecasting a sharp rise in its annual capital expenditures as it builds artificial intelligence infrastructure. Microsoft fell 7% after boosting AI spending and only edging past estimates for quarterly revenue in its crucial cloud computing business. And Tesla added 3%. The EV maker said it will invest $2 billion in CEO Elon Musk's artificial intelligence company XAI. It also said production plans for its cybercab robotaxi and semi-trucks were on track for this year. During the trading session, Texas Instruments stock jumped 10% after the analog chipmaker forecast first quarter revenue and profit above Wall Street estimates. And AT&T shares added more than 4.5% after the U.S. carrier projected annual profit above market expectations.
And as we wind up, quick look at other stories making headlines. Elon Musk's SpaceX may be heading to the public markets. According to a report, the rocket maker is weighing a mid-June IPO, potentially raising up to $50 billion and valuing the company at around $1.5 trillion, one of the biggest listings ever. And from SpaceX, let's move on now to Amazon. Amazon is slashing jobs once again. The e-commerce giant said it will cut as many as 16,000 roles globally, marking its second major layoff round in just 3 months as it restructures post-pandemic and ramps up the use of artificial intelligence. Let's quickly pivot now to China. China has approved the first batch of NVIDIA's H200 AI chips for import, allocating hundreds of thousands of units to major internet firms. The move highlights Beijing's sensitive balancing act of meeting surging AI demand while still backing its domestic chip industry. And with that, we come to an end of this edition of Morning Brief at 9. Thank you so much for watching. News continues right here on News 9.
खेलता है झूलता उछलता है दौड़ता कभी कभी दौड़ कराता है आगे आगे बढ़ता है इंडिया अमूल दूध पीता है इंडिया।
इतनी दूर कैसे करेगी? ऑटो लेगी क्या?
नहीं अम्मा।
तो
सरप्राइज।
जिद्दी लड़की।
इसकी जिद ने दी इसे एक नई उड़ान टाटा कैपिटल 2 व्हीलर लोन्स के साथ।